Well, this is Michael Douville coming to you from beautiful Phoenix, Arizona. Now, this is March 4th. We've got some very, very strong data with which to share with you today. We've been talking about the fact that we see some really strong things going on in the marketplace. The economy is just really doing very, very well. Now, there are, of course, a few segments of the economy that aren't doing well, but anything to do with manufacturing, IT, industrial, construction, a lot of the service industries are just on fire. And we've talked about the fact that our research is showing us that we're probably going to get a very, very strong first quarter and maybe an incredible second quarter. We got some data come out today. We'll share with you. We want to decide what is this? Is this good for us as investors? And of course, my asset class is real estate investing. And my premise here is going to be that we probably should really start thinking of putting some financing on our properties. We might want to start taking advantage of some of the low rates that we have, because these are really historical rates. And we're going to be paying these off in much, much cheaper dollars, because we've been talking about the fact that we're going to have inflation coming fairly, fairly soon for the first time in almost 2 decades. So let's go to the first slide here. Now, I got this morning. This is from PMI. And Market U.S. Manufacturing. They're showing that the economy in manufacturing is doing exceptionally well. Now, look up here, we're over 60 and 58 respectively. Now, if you get a reading of over 50, it means that the economy is expanding. Oftentimes you're going to get 52, 53, 54. That's very, very good readings. It's a pretty strong economy. This is 60 and 58. We are really on fire. That means that the economy is really coming out of the gate. Let's go to the next slide. Look what's going on with the U.S. durable goods. You can see that we had this incredible just collapse in new orders coming out of last March and April. We talked about the fact that we thought we'd have a very vicious recession, but it would probably be a short-lived recession. And of course, that is the case. It looks to me like we've come back to where we were prior to the recession. If not there, we sure are awfully close to it. But we're hearing anecdotally in my business that a lot of the builders are having trouble getting hold of materials, electronic switches. They're getting anything that's air conditioners, heat pumps, furnaces, dishwashers, anything electrical. And of course, that's just part of the supply chain. And that's because we're having so much demand. Now, what does this mean for us as real estate investors? Well, it means that the economy is doing very, very well. And we've been talking about the great markets of the United States, Florida, Texas, and Arizona, just doing exceptionally well. Texas just announced that they're going to unmask and open up their economy totally. You know that's going to be very, very good for Texas. Other states, are going to start following suit. Here in Arizona, we've been fairly relaxed about it, but that's probably going to follow suit. So Florida, Texas, and Arizona really, really doing very, very well. So what does this mean for real estate investors? Well, we've been talking about the fact that we may have inflation coming. You can see that in the basic materials cost. Dr. Copper is up to over $4 a pound from like right around 2. It actually even went below 2. And when you start seeing that copper is going up, copper is used in virtually everything. We've got lumber that is up 116%, steel's up 65%. And you can see that we have incredible inflation probably. And we haven't had this for a couple of decades. Now, I'm a baby boomer, so I remember back in 1981 and 82 when Paul Volcker broke the back of inflation by raising interest rates to historical highs. Now, this also corresponds to the absolute top of the interest rate cycle. And remember, it's 35 years up and 35 years down. Textbook would take it right around 2016, should be right about here. And of course, then we have a bottoming process, and we've actually even come down below here. So we are at 5,000-year lows in interest rates, basically the lowest ever in recorded history. So as real estate investors and investors that are looking for income, this tells us that if you have mortgages, you should really start thinking of refinancing them, particularly if you have some old mortgages. Now, if you're looking at mortgages that maybe you took out 10 or 15 or 20 years ago, you borrowed 120,000 and you've been paying it off, maybe you owe 30 or 40 or $50,000. We can reduce the risk, the encumbrance risk. Now, there's not a whole lot of risk on this to begin with when you have that little bit of debt on there. But if we took 4 properties, consolidated them, put them onto one property, it means the other properties then have no risk because they become free and clear. You probably reduce the amount of mortgages that you have, and certainly the cash rate. So you might have 3 or 4 properties that have $500 to $700 in mortgage payment. You reduce that. So for those, maybe you got $2,000 to $2,500 in mortgage obligation. Taking out a new loan today in the 3s, you're going to have something in the neighborhood of maybe $600, $700. So you're going to raise your cash flow by $2,000. Now, we even have a better bonus. If inflation comes in, just think we did a video a couple of weeks ago saying that 2005, that was the bubble territory here in Phoenix. We were like the poster child for the bubble. And just last month, we, in inflation adjusted dollars, met and reached what we peaked in 2005, but we had to inflation adjust. Now, home prices went up 40% in that 15 years, and the dollar has lost 30% in purchasing power in benign inflation. Now we're talking about moderate inflation coming. So what's going to happen when we double that? That means if you take out a mortgage today, in 10 or 15 years from now, you may have borrowed 100%, but in inflation adjusted dollars, you're only going to be paying back 50 or 60%. So it's a very, very good business move, and it's going to boost your ROI. Now, of course, we always want to make sure we never jeopardize the asset. You want to involve your financial advisor, certainly involve your tax accountant. You're welcome to involve us. We're very, very good at what we do. We're really good at this. Always talk to your spouse or your partner. So we always want to make sure everybody's informed. But we here at Creating Wealth, we do this on a day-by-day basis. So if we can help you in any way, we certainly will. I have a new book coming up. I'm pretty proud of that. My new book will be out probably next week. It's being formatted now. That's Real Estate Investing for Beginners. And if you want to get involved with us, we're Creating Wealth at westusa.com. You can reach me at michael@michaeldouville.com. I'm oftentimes in our corporate office. Remember, we did $5.7 billion in sales last year. So it was a pretty good year. You can reach me here at 602-942-4200. If I can help you in any way, I certainly will. My very, very best to you. Bye-bye now.